So, good morning, good afternoon, good evening to you, wherever you are. My name is Tina Adediro, and today I will be our host on the Business Pulse with Christine Pedabo. Today I have two amazing assistant managers in the building our audit practice, Fumi Famoshe and Abdelatif Omotade, and they'll be talking to us about how the audit practice generally brings value to the businesses with whom they work. So, starting with you, Abdelatif, to talk us through, why auditing for you is so important and what value you think that brings to your clients.
Thank you very much, Tina. Like we always say, as auditors, we are not just professionals. We are the guardians to statutory requirements of audit. We are friends of investors, so to say, or protectors of investors, and we are friends of businesses. So, apart from ensuring that audit is done properly and it meets the expectations and guidelines which is based upon, and we believe that businesses needs like a third party to ensure that things are done properly, and also ensure that the owners of businesses, okay, the investors, other stakeholders, they have confidence in the financial statements or financial reporting that an entity is going to publish out there. So we are more like we are adding value to the society at large in terms of ensuring transparency, accountability, and fairness in terms of the financial information that is out there.
Fantastic, thank you. So I mean, I can interpret that to mean sometimes you guys are police officers. How do you feel? How does that make you feel, especially when perhaps an audit has been requested by an investor? What extra thing needs to go into that audit to ensure that you're doing the proper thing and balancing how the business gets to operate?
Oh, okay. Thank you very much for the question, Tina. So I'll pick it up from where you said that means that we are police officers. So I'm just going to say not exactly.
Okay.
Because I'm thinking from the perspective of the clients that if the audit was not statutorily required, would you still go ahead to do an audit? What is in it for you? So essentially, if you're looking at it from the aspect of the investor, most of the times there are risks, there are underlying risks that a company may be faced with. And because you are not necessarily skilled with that particular experience or knowledge, you may not be able to identify those risks. That may not even be like financial indicators. You may not see it from your books that you may not be able to identify. So those are like the value that we are adding to your business. If you say that, okay, as an auditor, please come and audit my books. Then from the aspect of the investor, there are also a lot of things that you're pursuing. So audit is very robust in terms of we're looking at both qualitative and quantitative factors. Now, quantitative factors, you're checking the liquidity, you're checking the profitability, you're checking in the next 5 years and next 10 years, even immediately, is it an investable business? You're checking for that. And then qualitative factors, you're looking at is this company an investable company in terms of the name, the brand name? You're checking reputation. You're checking the makeup of the directors, the board of directors, are they investable persons and all of that. So those are like the value again that an audit gives to your company, and not exactly like we are police officers.
That's interesting. Thank you very much, Fumi. I'll pick it up from where you said that if it wasn't a compliance requirement, would you still do it, and would you have to do it? So what value? Why? I mean, if we're talking to businesses generally, especially now that, I mean, given that, if you're a small business, you're not obligated to audit your books. What would you be telling clients is the real value that, that they can earn from having that audit, irrespective of whether or not there's a compliant requirement?
Okay. So if you look at it, just for literally, when you engage an auditor, whether for statutory purpose or not, there are different reasons why you could actually engage an auditor.
Yes.
As an investor or owners of businesses, you want to know what is going on in that business, but you're not there physically, right?
Okay.
So you need an independent party to give you the true and fair view of what that business represents, apart from what is being displayed, in the financials you're reading. We want to know the accuracy of this information, right? So if you engage an auditor, apart from giving you an opinion of the truth or picture of what you have in the books, it's also, we all know that most businesses are there to maximize shareholders' wealth, cost, make profits. While you're auditing, you're also ensuring that things are done properly in order to ensure that objective is met. in the sense that when we're auditing, like she said, we're not just looking at the figures. We are looking at the control in place. We're looking at your ethical standards. We are looking at the tone of the stewardship or from above. So we are looking at risk. We are looking at a whole lot of things. And at the end of the day, all of these are tailored towards the progress of the business. So when you engage an auditors, we're ensuring that you are recording your transaction properly, which the end goal is to ensure that if everything in place, I mean, all of that things being equal, you're going to meet that objective. We want to ensure that you are being compliant, right? So apart from saying it is statutory, your business being compliant, your business having all risk mitigated, your business showing the true picture, your business supporting all words, organization requirements, say the sustainability, the ESG and all of that. Audit brings all of these and ensure that they're intact.
Fascinating.
Yeah, so yes, I would like to add something to what you just said. So I wanted to say that in addition to that, so as auditors, we are custodians of the law, of regulations. There's something we call this National Financial Reporting Standards, and every year there's a new release of standards that auditors are expected to comply with. So your financial statements are supposed to be in alliance or in accordance with those financial reporting standards. So you want to be sure that you can present your financial statements any part of the world, so that it can be read by any investor in any part of the world. That's what application of IFRS does for your financial statements. If it was not statutorily required, you'll be able to present your financial statements so any investor in the world can understand it, because it is at par with every other financial statement if it is being prepared in line with IFRS. Then again, there are some factors that you probably would see, maybe your team wouldn't see because they are in-house. They are like inherent risk. Because ordinarily, because you are in that particular business, it is already inherent. But an outsider, a third eye, can view that and they'll be able to identify that. Then again, going back to the IFRS, there are some measurements, for instance, of some instruments, financial instruments. There are measurements of different components of the financial statements that basically an accountant may not be up to date with that knowledge, but an auditor will definitely be up to date with that knowledge. So those are like the added advantage that you get from auditing your financial statements, even if it's not personally required.
Fantastic. Thank you. So I mean, given all that you've said, it's something that is required even from a measuring a business performance, being able to advise, organizations whether or not they're doing things properly.
Yeah.
Of course, being an independent eye because you're coming from outside and being able to see things a bit more differently than they who are within the business themselves. So what would you say is your red flag? I mean, we've all heard about the fact that companies keep two accounts. Not all companies, but some companies keep two accounts. And what would you say are those red flags, that jump out at you with some of your audit clients, or maybe even some clients that you refuse to work with as a result of that? Now, that's just to get businesses to know the things that they can or cannot do to keep them in a better place. Any of you?
Okay. So if I may go first, so first of all, as a client, you have to erase the mindset that as an auditor, I am a police. I'm not a police. We are working together. We're working together towards an end goal. So the resistance from clients to review some information that auditors might have requested is one of the first red flags. So it is more or less like as a professional, there's professional skepticism. So when a client is resistant to release some information because they feel it's my company's information, why am I releasing it to you? So it's making me think, is there something I should be looking at? Is there something I should be looking at? So um clients should understand that the auditor, first of all, we have the responsibility to make sure that your information that is given to us are kept safe and secure. As a matter of fact, if that information is seen somewhere else, you can hold us responsible to say that, how did my information go there? So you can be rest assured that it's safe and secure. If I'm requesting for those information, it's just because it is needed for some measurements, for records, and for us to be sure that whatever it is that we are stating is correct, true, and fair the way it is. So yes, the first red flag that I would say I would need to take a second look at this is if a client is resistant in providing information.
And I'll set my next part.
Yeah, that's we see that oftentimes. So And another one is well, we understand that there are different companies, different entities, they have targets, they have need for their financial statement. Apart from it being statutory, some people want to, you know, get a loan, get a project maybe from the government, and governments will not award you a project if you don't have an audited financial statement. So there's this need sometimes to say, oh, I want my financial statement so time. So one flag or one red flag you should see is when there's this undue pressure from client to say, I need this, and there's a deadline. Because they know fully well that audit is a process. It goes in different stages: the preliminary, the planning, the execution, the completion, and even the post-completion phases. So when the bank comes and say, I want this, can I get it in a week? Can I get it in 2 weeks? Then ordinarily you should be attentive to some things like, okay, sir, what do you need it for? It's not your year end, is it this? And so you ask questions. Although we have our planning phases where we deduce some of this risk and enough of red flags. I mean, your screen will be red. So, but the most obvious ones are when there's this pressure to this sense of urgency that is not so, normal. Say, I want this. So just pay more attention to details and bring that your professional skepticism in there.
All right, interesting. Interesting. So as auditors, beyond looking at the numbers, beyond looking at the processes, beyond ensuring, of course, the fair representation of your organizations, what other value are we able to add to firms to ensure that they are able to weather whatever economic storms come their way?
Like we said here all the time, one of the benefits of audit is apart from statistics compliance and all that, is to ensure that that business itself, is it contributing to the economy at large as a whole, right? Because as a company, from your tax liability, you are contributing to the economy, right? And what stems down to that tax liability is the accuracy of your financial information, right? Assets, your liability, your income, expenses, right? How that they have been recorded. So overall, if we have done a proper assessment of what the company is doing in terms of quantitative now, then you match it vis-a-vis the qualitative representation of that entity in terms of when you want to look at their say their corporate social responsibility. If a company is not doing well, it will be difficult for you to get back to its environment, right? So we as auditors, when go in there, we are not just looking at those figures there. We are also giving professional advices like, how about you do it this way? How about it's recorded this way? This will yield this and that. Okay, because we are external, we can see better than you who had prepared this information. So by so doing, we are encouraging you to adopt the best practices in terms of law, in terms of the environment, and even social responsibilities. So as auditors, even while we're having a chance, we say that when we audit you, we don't expect to come back next year and see those things with challenges. So you as an accountant, as a client, you are benefiting the same we are benefiting from you in terms of knowledge, in terms of updates. So we are contributing to the accountancy profession as a whole. We are also helping the business to contribute to society at large.
I was going to say that in addition to what you just said, there's planning, there's a planning stage, and there are different stages in audit. So there is a stage in planning that you have to evaluate internal controls that are in place. So in evaluating the internal controls that are in place, it is more an advantage, an added value to you as a company, so that you're sure that the controls that you have put in place, especially if they are existed in the first place, now they are existing, are they effective? And then if they are effective, to what extent are they effective? So that those are other controls. So that's how you get to identify the process owners for some controls. That's where you get to identify who is actually executing his job to the letter, to determine, yes, who is lacking in what and who is not lacking in what. So it just helps you to put systems and structures in place. That's an additional advantage that an audit gives to you, because there's something we call the management letter. A management letter will document everything that we have identified, not just in terms of the financials, also in terms of the internal control. After we have done an evaluation of the internal control, we identify the control deficiencies and then we report on it. So identification of those controls and assessing their effectiveness is part of the additions that an audit will give to you as well.
Okay, so it's value, value, value. That's fantastic. So we're in the third quarter of the year. what new trends can businesses expect to see in the coming months or even into the new year next year? What are those new things that they should be looking out for, start to perhaps put structures together to be able to accommodate or record those kinds of information? What are those new things to expect?
Well, the most recent developments in the industry now is the new tax act. So it should have effect on the financial reporting, although it's starting from 2026 January. But we expect clients to start making preparations to these new changes and their financials, and also adopt the practices of ensuring that they are in line with this, because when new regulations come, struggle to adapt, we struggle to adopt it. Okay, so that, which is part of what we're doing. Third quarter we do the advice lines, or some we even opt for interim audits, where we get to see their records for the first 9 months of the year between January and September. So that can give us like a heads off for the year ends, where we see what are the eventually so we also know that some businesses revenue, more of their revenue comes towards the end, depending on the that's on the nature of the businesses. So that's the point they start to struggle, and why, if they have not been doing the right time at the right time. So towards the end, third and fourth quarter, board wants to see it, they want to see half year, they want to see if they can still meet the budget or the projection at the beginning. So that's when you start to see abracadabra.
So in addition to that, the ICFR, that's Internal Control Over Financial Reporting, has been in I think about a year now. Yeah, so it was effective, and so for financial statements ending the 1st of December 2024 and beyond, for companies that actually qualify as a public interest entity, they have incorporated the Internal Control Over Financial Reporting into their financial statements. So there's been some exemptions, though. Some government associations, some government parastatals has been extended, but that exemption is just for a while. It's just for about 6 months or about 1 year. It's still going to be effective from the 1st of December 2025. And we realized that in the audits for the 5-6 months, some of our clients that are PIA sort of struggled because it's just the first year. So understandably, they sort of struggled with understanding what it entails, getting consultants to do the entity level review, basically the internal control review at across all the levels that it needed to be done. So in order to make it more seamless in the coming months and in the coming year, they can use the knowledge that he have utilized in the first half of the year to prepare towards that. Again, it is mostly because maybe there are no controls in place, or maybe the controls in place are not effective. That must be why there's a little bit of struggle, because what the ICFR is even requesting you is to just report on your controls. So if those controls were in place in the first place and they were effective, it's just to give you a report and say, yes, these are controls I have in place and they're effective. But it was because they're probably not in place or they were not effective. That's why it seems like to be like a little strong with it. So companies now, they have the rest of this year to guard up on putting controls in place, the effectiveness of their controls, so that when there is a need in the coming years, especially for those that qualify as a PIE, to report on it again, it will be seamless, and we won't have any business to have to like do a little bit of back and forth classes because of an ICFR.
Well, then that ICFR, thinking about ICFR now, because if we look at how most PI struggle to meet the requirements of that Financial Reporting of Council Act 2023, it's fascinating to know that ICFR has been in existence even before Rama. It's a key area of corporate governance and financial reporting, but because the enforcement is just something that we the Financial Reporting Council is just doing now, so people are running out of skits. I come to think of it, it's a best practice and culture, right? Just ensure that you put things in order, and you have internal control. Are they documented? Are they effective? Are you monitoring them when a change is needed? Are you looking at all these things? All of these are just to ensure that financial reporting is accurate, transparent, and is reliable for users of those financial information.
I suppose generally those are one of our challenges, right? In terms of implementing things. We probably we have everything down on some shelf, but nobody ever actually really goes back there and ensures that, of course, people use them on a day to day. And again, like you said, back to the issue of consequences, the issue nobody's watching. So we're looking forward to getting more structured as entities within the Nigerian business environment. We're hoping to see improvements. We're hoping you guys continue to do what you do. With the companies that where they're auditors, and of course that practice continues to grow. So thank you very much, lady and gentlemen, for being with me today. I'm looking forward to talking again and driving business compliance as we go along.
Your community side.
Yeah. Bye.